Hey, what's up, my friends? So, just a quick one, right? Last week didn't see my face, right? And that's because, right, with the birth of my newborn, right? Sometimes I get a little bit busy, I get carried away, and I figure, all right, this week I'm not gonna have any face on my videos. I'll just publish the video because I'm running low on time. So, yep. And today, well, guess what, right? She's away with the mom in Malaysia, so I'm free, right? I'm free to do some videos, to talk to you, for you to see my face and stuff like that. So yeah, so that's a little bit about what's going on in my personal life right now. So back to this week's market analysis, alright? I'm going to talk a little bit about entries, right? Because often traders, they are thinking, right? And asking me, Rainer, how do I enter the markets, right? Do I need to wait for a confirmation, right? So they're always waiting for confirmation, like the pin bar, the engulfing patterns, and sometimes these kind of patterns are just not going to happen on your charts. And what next? Do you still take the trade, or do you skip it altogether? So in this week's video, right, I'm going to share with you 3 different entry techniques that you can use to enter the trades. So all this and more in this week's market analysis. I'll see you there. Okay, so first thing first, I want to walk you through this market, which is copper. This is the daily time frame, and I want to highlight something to you. I think most traders will look at this chart and they'll think that this is a bullish setup because price has come into this area of support, and you got this bullish pin bar over here, right? Pin bar showing you price rejection. So they'll go long and they'll put their stop loss below this low of the pin bar. But I can tell you that this is a very low probability trading setup. Right? Why is that? Let me explain why. If you were to look at the higher time frame, right, using multiple time frame analysis, right, this is a video that I just posted a few days back, right? I'll put the link below so you can study more about it. And if you look at the higher time frame, the weekly time frame, what is price doing? Well, price is currently in a downtrend. You can agree with me, right? You have a series of lower highs, lower highs, lower highs, lower highs, and lower lows, right? So it's very clear that the trend is down. And if you look at the most recent swing on this higher time frame, is this swing over here, right? And from the looks of it, right, I'm sure you can agree with me that this swing has a high probability of actually retesting back this lows over here. That means that you actually expect price to trade lower, retesting back the lows over here. So all this is on the context of the higher time frame. And when you go back to your daily time frame, which is this same chart you saw earlier, you saw that this is the pin bar, the same pin bar you saw earlier. And if you think about this, would you want to go long into this pin bar, knowing that the higher time frame is in a downtrend, and the most recent swing has a good chance of it testing this lows over here, the same lows you saw earlier on the higher time frame? And on top of it, right, the second thing is this. The second thing is that you notice this pin bar relative to the previous candle or the previous swing, which is this entire swing over here, is very small, right? This pin bar is not significant at all. All right, look how average or how small it is relative to the previous earlier candles. All right, so to me, this is not a reversal. To me, it's just simply a consolidation before another move lower, right? Just a consolidation before another move lower to retest the lows over here, right? So my take on this is that this pin bar is a very low probability trade, right? You need to trade it in the context of the markets, and in this instance, right, this current context of the market does not favor this pin bar to be a long opportunity, right? In fact, I would stay out of it, and if you really want to trade, right, I'll prefer to go short on this market rather than go long just because you see this bullish pin bar. So I think this is a very important aspect of trading, right, whereby you don't want to memorize patterns in the market. Instead, you want to focus on what is the context of the market, what is the trend doing, where is the area of value, right? Where is the likelihood of price going to move over the next few days, the next few weeks? So all this is very important, right? If you're memorizing patterns alone by itself, right, chances are it's going to, cause you to lose money consistently, in the long run, right? So this is my take, right, sharing with you why I think this pin bar is a low probability setup. Okay, so that's it. Let's move on into something else and share with you a few trading opportunities coming into this week. Because last week we talked about, I think entirely on the stock market. So this week we'll go back to our usual market analysis, focusing on the forex and futures markets. So in this market you're looking at is platinum, right? So this is the weekly time frame of platinum, right? Notice that it formed an inverse head and shoulders pattern over here on this weekly time frame, and this is the neckline. So it finally broke above the neckline and it's about to retest this previous resistance turn support, right? Because once price breaks above resistance, it tends to act as support. So this is the higher time frame picture, right? You know it is approaching a key area on the weekly time frame. So you go on to the daily time frame, you analyze the market. What's the daily time frame telling you? You see that currently the daily is in an uptrend, right? You have a series of higher highs, higher lows, right? Very clear. And right now, price is about to retest this key area once again. The previous resistance turns support. So if I zoom out a little, you can see that this is the key area we are talking about. This is the resistance, resistance, resistance. When price breaks above resistance, it comes back and tests as previous resistance turn support. So we are in this area right now. So now the question is, Rainer, do I go long immediately, or do I, wait for some sort of, price action confirmation? So there are a few ways to go about it, right? Some traders, they are more aggressive and they are perfectly comfortable just going long the moment price comes into their zone. So if this is their zone, they just go long over here and get their stops below this area of value. So if you're using 2 ATR, it'll be somewhere here, I'm guessing, right? Or maybe somewhere here. So there are two types of traders. The first type will just go long on the moment price comes to an area of value. The other type of traders will wait for a price confirmation or candlestick confirmation. They may look for stuff like, a pin bar showing you price rejection, right? Or an engulfing pattern, closing bullishly higher, right? This is the second type of trader, that will trade this kind of trading setup. And third type of trader, alternatively, is the one whereby they'll go down into a lower time frame and look for price action confirmation. So what do I mean by this, right? So another way you can go about it, right? This third way is, I would say, is a different way to do it, right? But there's no right or wrong. The third way is this, right? Is that you notice on the 4-hour time frame, which is the lower time frame, you see a series of lower highs, lower highs, lower highs, lower highs, lower highs. Right? So when will you have a clue that price is about to reverse back towards the upside? Right? So right now you have a series of lower highs, lower lows, lower lows, lower lows, lower lows, lower highs and lower lows. So needless to say, right, a clue that the market will tell you that it's ready to go back towards the upside is that if it can create a higher high and higher low. Am I right? So that will look something like this, right? Where price retraces lower and it trades higher from here. So at this point in time, you have a higher high and higher low. Right? So it's telling you that the trend on this current time frame, the 4-hour, may potentially be coming to an end. And then it would resume back towards the trend on the higher time frame, which is this daily chart you see over here. So when you see that happen, there's a possibility, right? On the lower time frame, once you get a higher high and higher low, it resumes back towards the trend on this time frame. So there is another way you can go about it, right? You go down to a lower time frame and wait for a break of structure, right? For example, in this example, you want price to trade lower and break above this swing high over here. So at this point in time, you have a higher low and a higher high, right? So this is another way you can actually, enter your trades, and you can just put your stop loss below this swing low over here. So there are, different ways to enter your trades. And the thing that I want to point out is that, your entries is not really important, right? What's important is to understand the context of the markets you're in. So once you understand where you are in the big picture, right, then you can find an entry that makes the most sense to you, right, and place a logical stop loss and enter your trade. As simple as it is, right? So this is the chart of platinum, right, and to share with you a few of the ways that you can actually enter your trade. Okay? So now if this is a little bit too much for you, let's talk about something simpler, much more straightforward, right? Aussie dollar, how about this? Aussie dollar, right? Let's look at the weekly time frame. You notice that it's in a downtrend, right? Series of lower highs, lower highs, lower highs, lower highs, lower highs. And when price broke right above this area of resistance over here, I thought the trend was coming close to an end. I thought this would be the double bottom that we've seen. But apparently not, right? It appears to be a false breakout as of right now. Because why do I say that it appears to be a false breakout? Because when you see price break above this this resistance area over here, you expect it to act as previous resistance, turn support, and then it rally higher. But apparently what happened is that it broke and closed below this area of resistance. That means those who got long are now trapped, right? They are losing money, right? It's a false breakout. And there's a good chance of it retesting back these lows over here. So that's it. My view is that this is possibly a false breakout, and I'm be looking to short the Aussie dollar. So where would I look to short the Aussie dollar? You go down to the 4-hour time frame, there will be a setup that is all too familiar to you already. Right, you look at the 4-hour chart, you notice that the 20 and 50 period moving average acting as dynamic resistance. So this is an area of value, right? This is an area where you want to go short. So you can go and look at this time frame, the 4-hour time frame on Aussie dollar, and if price comes into this area of value, you can find an entry technique that makes the most sense to you and go short. Right? There are 3 ways to go about it, right? As I've shared earlier. Number 1, you just go short blindly into this area, right? Meaning you're an aggressive trader, you just go short into this area of value. Number 2, you wait for a candlestick pattern to confirm your bias, like the pin bar or engulfing pattern. Or number 3, you can go down to the lower time frame, right, and look for a break of structure before entering your trades. So this is a few ways to actually enter your trades. And again, I want to highlight out to you is that I don't trade patterns or entries in isolation, right? These 3 different ways to enter the trades are basically meaningless if you do not understand the context of the market. That means you don't know what a higher time frame is doing, and you have no clue into where price may potentially go into the future, right? So all these entries, right, your entry is only decided the moment, or I would say it's only decided after you have understood the context of the markets, where you are in the grand scheme of things, right? This is important, right? Often I see traders just finding entries, right, looking for pin bar on their chart, or they look for an engulfing pattern, right, or they look for a head and shoulders pattern. They look for all these patterns, but they don't understand why they are looking for these patterns. They don't understand what the higher time frame is doing. And if you don't understand this, right, then whatever you're doing is just basically, random, right? Your results are going to look very random because there is simply no odds in your favor, right? You don't have the trend at the back of your trade. You're not trading from an area of value and blah, blah, blah. So this is important, right? Understand the context of the markets, and then you can find an entry that suit the current theme of the market you're trading. All right? So I've come to the end of this week's market analysis. I hope you find it useful, right? So if you have any questions, any doubts, or anything that you're not too sure about, just feel free to leave it in the comment section below. All right? So if you're new to this, feel free to hit the subscribe button below, and you'll stay updated every single week on the videos I posted. With that, I wish you good luck and good trading. Talk to you soon.